Hello everyone, this is Bella. Welcome to my new teaching video on technical analysis. In the last video, we discussed what makes trading profitable and why should we build a trading system. In today's video, I'm going to show you how to build your own trading system, now that we know the importance of trading systems. But some people might ask me if it's okay to just take someone else's system and use it, or if you share your system and I don't have to bother designing it. I can start with the conclusion that I haven't seen anyone copy someone else's system and make money from it, but it's a very small number of people, and most of the traders who make a steady profit have their own system, and the reason for this is very simple. Every trader's system is based on his own understanding of market movements and price patterns and his own trading experience, and you're not going to get the same results if you try to copy them. Take my own system as an example, and it's centered around 3 words: pullback, and breakout failure. But you can find out by talking to your friends in the group. Only a very small number of people can understand the essence of my system, and there is no way, so I'm going to teach you to design your own trading system and organize your understanding of the market into a set of trading principles that are easy to execute, which I think is the easiest and most comfortable path to a stable profit. The other important thing to note here is that since our trading system is based on our understanding of the market, what if our understanding of the market is wrong? Whether the system built on this premise can make money, I believe that everyone knows it. Just like building a house, we need all kinds of building materials. If a person's trading idea is wrong and he does not use the trading tools correctly, he will build a house with inferior building materials. The house is ugly, and there are several big holes in the wall. Do you dare to live in such a house? I wouldn't dare. So if you have any friends out there who think that the market is controlled by the house and that we have to be smarter than the house in order to make money, and think that the double top and bottom pattern is more likely to reverse, and that you want to know every move in the market and not accept that there's a lot of volatility in the price movement, then I suggest you go through all of my previous videos and establish the right values for trading. So with that said, we're going to start trying to build a trading system from zero, and in the process I'm going to try to explain the logic and considerations of every step of the way. So the first question that needs to be solved is, what cycle do I trade: long-term, short-term, or wave? One might ask why I can't do all of them, but just choose one type. It's very simple. The simpler the system, the easier it is to execute. Very few people have the ability to master a system that has long and short lines, holding different types of orders at the same time so that they don't affect each other is a very serious challenge for emotion management and execution. It's as simple as it can be, and the profitability of this hybrid trading system is not necessarily better than that of a single system, and I'll talk more about that later. Long-term trading advantages: trading opportunities are limited. There is plenty of time to analyze and make decisions on each trade, and most trades within the system are expected to be very high, and there is little to do once you enter, but it is easier to follow up and stop losses or close out positions after a key signal. The downside is because there aren't many trading opportunities, and most of the time is spent waiting for a hothead who might screw around before there's an opportunity, and by the time there's an opportunity he's already burned out. In addition, those who cannot hold the order for a long time are easy to find a reason to flat the order, resulting in the system should not get the profit. I think the long-term system is suitable for people who have their own business and financial strength, treat trading as investment, as a side business and a way of financial management. This kind of people do not have something to do all day long. He stared at the plate. Moreover, most of them have certain experience and are more likely to accept the game of the trading market in their mentality. I think this kind of people are very suitable and easy to do well in long-term trading. If you are a person who has no job and the principal is not rich enough, and expect to make money from the market every time to support life, it should be difficult to do well in long-term trading. Short trading, which is the type of advantage trading that I do all the time, there's a lot of opportunity on an average day, and because there's a lot of opportunity, there's a statistical base, and the results of the big trades are much closer to the expected value of the system, which means the profit curve is very smooth and it's quick in and quick out, and it doesn't take up any money, so a lot of professional day traders are able to make very impressive returns. The initial capital required for the account is not large, which most people can afford. Disadvantages: the biggest disadvantage of the short-term system is that the technical level of traders is very high. Fast in and fast out requires the ability to read charts quickly and accurately and make decisions quickly. Also requires the ability to manage emotions as soon as you stop losing on a trade and start looking for the next opportunity that suits the crowd. Needless to say, I think short trading is just for experienced traders who play short. If they are not skilled enough, it's going to turn what you would have lost in 2 months into 2 weeks of losing in the band trade, and this type of trade is between the long-term system and the short-term system in terms of the frequency of the trade and the holding period, so there's no obvious downside, there's no particular advantage, and it's more in the middle. Anybody can do it. I recommend that you start with this type of system, and what I'm going to design today is a band trading system, and there are a lot of good traders who do band trading systems, and there are a few people who have a little bit of ego and don't want to do simple trades, and they want to do something difficult, and that's not going to help you with trading. When you can simply make money, you have to do something fancy, and you're going to lose money, and you're going to start simple, and you're going to build up your experience, and you're going to build up your capital, and you're going to do whatever you want when you're strong. Okay, so we've got the pros and cons of each holding cycle, and we've got the answer to the first question. We're going to design a band trading system. Now the second question is, what type of trade do I do, trend, range, or reversal? I'm sure I don't need to go into this too much because in the last video we've talked a lot about these 3 types of trades. The trend trade is the easiest. If you're on the trend, you're already up 10%, and the range trade is not hard to break out of, and it's very comfortable, and the reverse trade is not recommended even if you have a very high profit/loss ratio, but too low win rate is unbearable for most people. Since the trend is the easiest, we choose trend trading, and trend trading is divided into trend breakout and trend pullback. We also choose to do the simplest, trend pullback. So here's the answer to the second question, and we've solved that we need to design a trend pullback band trading system. Now the third question is, what tools do I use to read a chart and make a trade? Is based on the information that the price chart gives us, and we make analytical decisions, and we execute that. First, we have to be able to read a chart. There's a tool to talk to the market. What it's like if you can't talk to the market, and I have friends who are in the stock market who don't know anything about technical analysis, and when they look at the K chart, it's like they're reading a book and they can't understand anything, and that's because they don't have the tools to talk to the market, and they can't capture what the market is telling us. What we learn about technical analysis is that we find tools to talk to the market, and if we want to trade trend pullbacks, we need to know whether the current state of the market is a trend or a range, and if it is a trend movement, we need to know whether the trend energy is strong or weak, and whether the trend state is healthy. We can choose to use the price behavior to read the chart and see how the bands change and determine the trend, and see how the slope of each band changes, and see how strong the trend energy is, and see how deep the pullback is, and how much the breakout is, and see if the trend is healthy. Price behavior analysis is a very good tool for reading charts if you are skilled in using it, but it requires a certain level of skill, and it is very difficult for beginners to master without a certain amount of trading experience. There are a lot of indicators that are designed to read charts, and I'm not going to go through them, so let's just use the simplest chart reading tool, the average group. I believe that most of you are familiar with the design logic and usage of moving averages and moving averages, and this is the most commonly used indicator and system, and I won't talk too much about it, and there is a lot of information on moving averages, and if you don't know it, you can learn it yourself, and I'll just mention a few things. A moving average can be thought of as the cost of holding positions for different types of participants in the current chart period, and notice that the current chart period, for example, EMA Mono 4 on your 1-hour chart is 144 EMA on the current chart. It represents the cost of holding positions for long-term participants, but 1 hour of EMA 144 may only be approximately equal to EMA 10 on the daily chart, which may be the cost of holding positions for very short-term participants. Don't confuse this with the current chart period, since the moving average can represent the appropriate cost of participants to some extent. Can't I chart the holding cost of all 3 participants with 3 moving averages and then observe their changes to know the current state of the market? If the moving average group shows a short position arrangement as shown in the chart, It means that the cost of holding positions for short, medium, and long participants in the market is decreasing. When the price returns to the moving average, the participants who have been long and trapped will look for an opportunity to leave the market, while the strong short participants will look for an opportunity to add positions, and the participants on the outside will step in at the right position to short the market and eventually push the price to a new low. It is very easy to identify the state of the market using a moving average, because the direction in which the average cost of holding moves is the direction of the least resistance to price movements, the direction of the trend. Assuming that the price does not return to the moving average, it moves quickly towards the trend. This is a sign of a strong trend, and the breakout of trend direction also has a continuous follow-through force, which is shown in the chart as the alignment of the trend group, and the price is not even retracting the short-term moving averages, and the distance between moving averages is very large, that is, the convergence divergence is very large, and this kind of moving averages chart pattern corresponds to the strong trend pullback. Is not good to participate in the trend breakout. Entry is more effective, but we designed a trend pullback system. You can wait and see if you encounter this form. Like the pattern of a pullback, a pullback trend is represented on the chart as a moving average group of dynamic support resistance area to push the price forward. This is a general healthy trend that allows us to enter the trade through the pattern of a pullback, and the system that we are going to design is mainly involved in such a trend. It is relatively easy to do. If you have this moving average along the way, you have these areas of dynamic support resistance that are also pushing the price up, but they rarely give you a big break in the trend direction, and there's a lot of overlapping lateral movement, and that's what the trend channel looks like. The trend momentum is not strong, and it's probably a bear flag correction on the big cycle chart. I personally am not good at trading this kind of wide channel, and most of the time it doesn't give a very strong entry signal unless you sense in advance that there's going to be a channel that's going to be able to place an order at the trend line, and so the system that we're designing today is going to trade very little of that. All of these cases are trending, but we know that the market is mostly not trending, and it's like this. There is no tendency for moving averages, short, medium, and long moving averages, to intertwine with each other and prices to move up and down. We know very easily from price behavior that this is a trading band, and since we've designed a system where the main trading trend is a pullback, that's a market state that's given up. Okay, so that's the answer to the third question. We are going to use the moving average group to read the chart, but there are several points to note about the moving average group. First, it is better to use the moving average of E, M, and A, or the moving average of S, M, and A, because there are some differences in the algorithm between E, M, and S, M, and A. So there's a little bit of a difference in the performance of these two averages, but I'm not going to go into that because there's a lot of information and videos on the internet about the EMA and the SMA, and I'm going to suggest that those of you who don't know it look it up, and it's very basic, and I'm going to say that the result is that the EMA and the SMA have their own uses, and I'm going to suggest that you use the EMA averages, because the trend arrangement looks comfortable and the S, M, and A averages have a hard time forming a perfect trend arrangement. Once you get into the interval state, it's really messy, and you can compare that, and I'm not saying that E, M, A moving average is better than S, M, A. For those of you who are more experienced, it doesn't matter which one you use, but E, M, A is much easier to use, and we talked about how easy it is to make a trade. Second, does the average group parameter have to be 30, 50, 100 as I did? Of course not, as long as the parameters are set logically. What matters is the period collocation and the corresponding price pattern. If you give me a moving average of 12, 10, 50, I can trade. Give me 50, 100, 200, I can trade. The small period moving average corresponds to the micro price behavior, and the large period moving average corresponds to the large structure. After you have accumulated enough educational experience and technical knowledge, you can set appropriate moving average parameters according to your own habits. At the beginning, you can use the set of parameters recommended by me or those recommended by other teachers. Third, some friends in the system of the moving average group found that has formed a trend arrangement and then directly into the market, or when the price back to the moving average, directly into the market without considering other factors. This approach is definitely not correct. There are also some people who like to do trend lines, and then as soon as the price moves to a trend line, they just jump in, or they see a trend line break and they think the trend has reversed and they just jump into the backhand trade, and you can think about it. If you could do something as simple as that and make money over a long period of time, then you could just turn it over to EA and it would be easy to set up the entry conditions and it would work better on a computer than we would on a manual basis. But the fact is that there is no such thing as EA running well, because whether it's a moving average or a trend line or whether it's a technical indicator that you look at separately, it's just a graph reader that tells us what's going on in the market. It doesn't give us a complete entry logic, and if we're going to enter and trade, we're going to have to look at the details and make decisions. Now that we've established that we're going to trade trend retracement bands, we've got chart readers and moving averages are good enough to know what's going on in the market. Now the question is, how do we get in when the moving averages have a good trend arrangement and the price has moved back to the short and medium cycle moving averages? That is, what shape are we going to trade? I don't need to say much about the form part. I've spent a lot of time in this series explaining the logic and trading patterns of common range reversals. We just need to pick a few complex pullbacks that are easy to trade, such as the double bottom bull flag, the double top bear flag, the double stage pullback, the triple Westlife pullback, and the narrow trading range at the end of the pullback pattern. Trends like convergent collation and horizontal interval collation are easy to trade, but not in our system today, because the above-mentioned patterns are completely enough to trade. We don't do simple callbacks, because simple callbacks are more suitable for short line systems, okay? So now we have a moving average, and we see a healthy trend, and we have a pullback near the short to medium cycle moving average, and we have a pullback pattern in our system, and the question is, what signals do I want to enter on? And a good entry signal can greatly improve your systematic advantage. For example, in a bull market like a double bottom pullback, if you go in and go long when you break that little high, then you have to set your stop below that band, and you have to have a very wide stop. And that's squeezing the profit margin and lowering the break-even ratio quite a bit if you go in and buy the second leg down near the previous band low. So at this point in time, you don't know where this drop is going to go, and you're on the left side, and your winning rate is going to go down. If you're on the second leg down a little bit below or close to the front side of the small band and there's a strong single K reversal and you're on the long side, then in that case, you have a double bottom that is very well confirmed and you can get in at a very good price. So obviously, if you have a good signal confirmation, which I've talked about many times in the course, a strong single K line reversal, a strong double K line reversal, a second break through the channel line booking, all very good entrance signals. What you see is that there is no entry signal, since it's the last step that you need to think about, and a lot of newbies get confused about this step, and seeing the signal is like entering the market without considering the market context, and the correct trading step is to look at the overall market context. Is it worth trading? And then look at what the most recent price has been and whether or not you can enter the market. And when you have a logical entry, now that we've made all the decisions about the market, we just need to place the final order. How big a position should we open? Used to think there was a fixed pattern in position management, which meant that short-term stops should be 1% to 2% of the account principal. Band trading, each stop loss should be controlled at 3%, 5% of the account principal. If presented, you can take 10% of the account principal each time to game. But I've been talking to my friends about this recently, and I've changed my view that position management is very individual. And let's say a guy has a $1 million investment budget and he only puts $100,000 into his trading account at a time, so he's going to put $20,000 per stop loss, which is 20% of his trading account. So if you look at this ratio, and it looks like it's a very heavy position, but it's a very light position for its total investment budget. So let's say a guy who has $10,000 in advance income and he puts $5,000 into his trading account, even if he has a very heavy position and doesn't get lucky enough to dry out his account a couple of times with stops, but he will receive the money next month to make up the account and continue to operate, so it is not heavy for him. So position management is different from person to person. But there are two principles for you to learn from. The first is definitely not overweight. How to measure the overweight? Let's say you don't make 10 stops in a row that add up to an amount that's so overwhelming that it's going to affect the next move. Someone might ask me, how is it possible to lose 10 times in a row by doing a good trade, and I can tell you that it's normal to lose 10 times in a row, and until I lost 10 times in a row I couldn't believe that with my graph reading skills it would happen. The second thing you can't do is you can't be too light, and it's easy for you to underestimate the market because you don't manage your orders. When you need to stop your losses, you want to carry on for a while. When you need to stop your losses, you don't make enough money and you don't close your positions in time. The third short I-term system is the best relative light position because trading opportunities more heavy position operation looking at their account net value skyrocket everyday ordinary people cannot bear. The band system has no obvious advantages and disadvantages, and the average position can be long-term, and the system is relatively heavy because you have very few trading opportunities, and most long-term systems are going to choose very high expected trading opportunities, and you need to expand your position appropriately according to the Kelly formula. It's best to keep your position at a level that allows you to stay focused in the market and not lose a lot of money, but a lot of your friends are still in the novice stage of trading and they're still learning how to read the market with a small position, and it's okay to wait until you're ready to trade for a living and then find the position that works best for you. When you're calculating your position, you have to calculate your stop-loss space. So let's say you see a chance in Bitcoin that fits the system and the stop-loss space is about $1,000, and given your risk tolerance, you think it's best to play with $2,000 per trade. So for this trade, you're going to open 2 Bitcoins, and that's a simple position calculation. Because I am specialized in foreign exchange, gold, crude oil, short-term stop-loss space is basically fixed, that is, each time the order position does not need to be calculated separately, but if you do band trading system different varieties of different time periods on the chart, stop-loss space difference will be great, so every time to recalculate the position. Now we have basically done the analysis and decision before the entrance, and after the entrance, how do we manage our orders? You have to find the right exit position first. You have to stop profit and stop loss. If you look at this trading moving average group, there has been a short trend arrangement. It has a multiplicative property, and you can think of it as a horizontal interval arrangement, or you can think of it as a fantastic channel in a 3-stage form, and the important thing to know is that it's a complex pullback pattern rather than you think of it as a trend reversal pattern. Price level to the callback form also found. Again, look at the entry signal. There are 2 short signal K line. The first although there is no harvest negative line entity, but it is also a good single K line reversal signal. K line broken can enter the short at the same time. It is the level of the previous small, high false breakthrough, and also back to the previous down the breakthrough point. This is a very good entry signal, and the second one is also a very good single K wire that has less overlap with the previous K wire, and this K is a second entry for the first signal and a second break that we often use. When the price breaks this K line, we can enter the short position. The 2 K line entry levels are similar. We will choose a slightly worse level as the short position. If it was a short position, I would put my stop pretty close to it, just a little bit above the K line, but because we're in a band system right now, and the trading opportunities that are screened out are pretty good trend patterns, and the price signals are in our favor, so we can have a lot more confidence in our entry. Allow the price to retest a little bit is our entry area. Put the stop loss a little bit further, but don't put too far. To put too far is meaningless. This degree is difficult to quantify, only experience to set. If you want to have an exact number, that means your stop loss space should be no more than 2 standard HR values, and the direct loss level is indicated on the graph here. Let's look at our profit target. So the first target is the front band low, which is the level TP1. The probability of the price moving here is very high. We can close out half of our position here and put our break even on the rest in the hope that prices continue to break down. There's a lot of logic to the setting of the second target level that you can look at, like you have a fixed profit/loss ratio, you have a profit level of 3:1 or 4:1, and you can also look at the goal of the form breakthrough. For example, if you think of the form as an interval arrangement and then you extend the height of the interval equally downward to find a target level. The logic for the second execution target in this diagram is that leg 1 equals leg 2, which is to take the trend band length in the front, and I've labeled it here with a line segment and move it directly over to measure the length of our trend motion. Because in a healthy trend each trend movement should be about the same length, and if the subsequent trend push weakens it represents a trend energy deficit or what we call a divergence. We don't have to put a stop loss right at this target level, and the price doesn't have to be exactly there to make a little bit of profit. The trend is not always going to stay healthy, so the odds of getting to that end goal are not going to be too high, and it's not a bad idea to close out when we've already made a lot of money and we see the price stagnating or we see a reversal signal, and then finally you can try to get to a bigger trend profit with a trailing stop loss, which requires some technical skill. The easiest way to set a second stop profit target is to choose a fixed profit/loss ratio like the one shown here. The profit target for a 3-to-1 profit/loss ratio is roughly here. If you're a beginner, you can do it otherwise if you're confident in your technical skills. A simple summary of the setting of stop loss is that the stop loss setting is placed a little far away from the signal K line, cannot be too far away from the first target set near the band point. The second target fixed profit/loss ratio, if you're confident in your ability you can do it the other way around, and I'm just going to talk a little bit about the question of whether it's better for the price to move to the first target, and I'm not going to hold half of my position and wait for the price to move to the final target or not, because it's mathematically difficult to get enough samples data to compare the two methods of liquidation, which system has more advantages, but from the perspective of trading experience. The system with the first target level, closed half the curve, is smoother and more comfortable to do because the probability of the price reaching the first stop is high and the win rate of the second stop is much lower. And when the price doesn't move to the second goal, we're going to be able to pocket the first part of the profit and not spend it in vain. In general, order management in the band system and the long line system is very easy to reach the stage goal, and then you can start to partially liquidate your position and set your capital break, and then you can continue to hold the position and wait for the price to reach the final target, or you can see a very negative signal in the middle of the course and leave the field. Order management in the short line system is very difficult to do and requires a lot of your overall trading level. You have to be able to read charts quickly and accurately and make decisions about how to execute them, and you have to be able to trade on your own, and it's hard for me to understand that. But one thing is for sure, if you don't trade well and you mess around and you lower the expectations of the system, it's better to do nothing and let the price work itself out. We've basically covered the analysis and decision-making part, and in order to make the system more advantageous we can also look at the overall market context before we go in and look at the pros and cons. For example, this entry case that we just used, this pullback pattern just happened to retest the previous breakout point right here, this breakout level, a small band point, which is a positive factor for our entry. Other positive factors are the Fibonacci pullback, various technical indicators, confirmation, etc., etc. The more favorable factors we have, the greater the advantage of this transaction, but the less such transaction opportunities. We should try our best to grasp the opportunities when they appear. In this case, the 5-minute chart on the left shows a healthy uptrend, but we switch to the 1-hour chart on the right and find that the current price is not far from the upper resistance level, and the near key support resistance level in the big cycle is a negative for our smaller trend. We can either abandon this trade or we can go conservative, and a significant false break in the trend direction is also a negative for us because the trend retracement system that we do prefers to trade in a healthy trend. There are many technical analysis tools that can determine whether the market is moving in our favor or against us. It is the basic principle of all traders to look to the advantages and avoid the disadvantages. I don't need to say enough about the importance of emotion management in trading. We can design trading systems to avoid trading opportunities that can make us lose control. What can make you lose control is different from person to person. When I started the trade, I occasionally used a batch entry. For example, in a long trend it had a lot of support and I marked support 1, 2, 3, 4, and then when the price fell back I entered in sequence, but as the price fell deeper and deeper, as I got bigger and bigger, I didn't want to get out of the market thinking that we were close to price support anyway and prices would always come back up. And finally, when I realized that the bull trend had been reversed and the float in my account had far exceeded my maximum loss, after that, I realized that the batching strategy was like boiling a frog in the water for me to neglect order management. So I removed this entry from my system. You know, I never enter a trade twice, even though he stopped me and then gave me a better second entry, so you can think about your trading experience. What kind of? If a friend says, "Teacher, everything I do is easy to lose control of what to do." In this case, I suggest that you give up the transaction. The result is very likely to be a loss of bankruptcy. Good. According to the above steps, finished a complete trading system was basically completed. There will be some small problems I might forget to tell, such as trading products, transaction cycle, and so on. These are very simple people according to their own situation. To go big system framework is like that. This video has been going on for a long time and I want to finish quickly, but I'm just going to talk a little bit about the system that we've come up with today because I improvised it when I was preparing for the course. In the next video, I'm going to show you some examples that some of you might think are a little bit crazy, but if you just follow the logic that I've shown you, this is the way most trading systems are designed in the market, and you spend thousands and thousands of dollars on courses and training courses, and you're not going to get a better system than this. Moving averages with price behavior or moving averages with entry technical indicators is one of the most common trading systems on the market, and you can go to YouTube and look at bloggers who specialize in trading, and a lot of people have these systems, and they just have different trading styles and different trading levels, and they have some differences in design, but they're all the same. Some of you might ask, does this system still work when you're using it? I can tell you that there are only a few people in the investment market who learn technical analysis and a few people in the investment market who learn technical analysis well. So that systems that are common to a few people and 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 a few people in the investment market. The EMA system has worked for decades, and I would venture to assert that it will work for decades to come unless there is a qualitative change in the financial markets that completely overturns the existing system. I used this phrase in the very beginning of the video, and it'll show you today all the techniques that we've studied analyzing price behavior, wave theory, entanglement, Fibonacci, harmonic morphology, technical indicators, and so on. These are just tools and techniques. If you study these techniques thoroughly, you just read the charts more accurately and objectively. If you want to make long-term, stable profits in the market, you have to have the right trading mentality, trading philosophy, trading system, which is to use the right way to control the skills you have mastered. I would like to share with you the chat with Mr. Luo recently. Mr. Luo said that he didn't learn anything new in the communication with me, and he had already learned the techniques I talked about. However, in the communication with me, he connected the fragmented knowledge points he had mastered before. Alright, that's it for today. Thank you for watching. If you like it, please like, comment and subscribe for future updates.